I'm actually Prebble. I'm a partner in the London office of CLIFFORD CHANCE and head up our Financial Institutions Group. I'm thrilled to be joined by Shimin, a partner in our private equity team, who's worked with me and the team on a number of financial services M&A transactions. We're going to talk today about private capital's increasing role in financial services M&A.
So Ashley, what are some of the key trends that you've seen in 2025?
Well, the first point that I would make, I think, Min, is the real increase we've seen in private capital investment in the financial services sector in 2025. The increase has been roughly 30% or so since 2024, and it's been notably across all sectors, whether that's insurance, whether that's banking, fintech, or asset management. In the insurance sector, we've seen different investment profiles for each of the PE houses, for example. So on one end of the spectrum, you have Apollo with their significant stakes in the life insurance sector through Athora, really almost as an asset under management play. You see other houses who are much more interested perhaps in capital light models, such as insurance intermediaries and wealth managers, and you have others who are somewhat in the middle.
Great. And do you think that will continue into 2026?
Yes, I absolutely do. I think that you are going to see people pursuing these investment strategies in this way. I think that there's increased opportunities in the sector, particularly as you have some private equity owned financial services businesses, which will come up for sale in effect during this period. You have PE specific funds that are being set up to invest in the sector. So I think, again, you're going to see a real run of significant transactions in the financial services sector. So, Min, one question for you. I mean, we started to see an increase in consortium deals, particularly in European financial services M&A. What do you think is behind that trend?
Yeah, I mean, I think absolutely. We have seen an increase in that in 2025. We saw the Viridium transaction that was huge in the market. You know, it had a consortium of BlackRock, Generali, TND, and other insurers teaming up to buy Viridium. I think we will see more of these partnerships, and a huge reason for that is regulator perception. So, you know, I think in reality, there is particularly in these competitive processes, there is a perception that if you go in as a consortium, bringing not just sponsor expertise, but also expertise from insurers, that together builds a really credible profile for regulatory approval. But it's obviously not just about regulatory risk. There's also capital exposure risk, and the idea there being that over the lifetime of the investment, if further capital is required, there is a whole team of consortium members that could come together to support that. So it's absolutely something that we're seeing more and more and being discussed this year as well.
Yeah. And that makes sense, doesn't it? I think particularly when you think about the Viridium transaction and the asset there, which was a life insurance asset in Europe, where I think regulators are expecting to see a strategic owners alongside private capital owners, which will give them greater comfort in order to support that asset in the future.
Absolutely. Although that's not to say that regulators are taking or having an allergic reaction to private capital investment. I don't know what you think, Ashley, but it feels like regulators are on the journey now to recognizing that private capital should not be viewed as a single block, and there are huge benefits that private capital could bring as well to financial services.
I think that's absolutely right. And certainly in our experience, I think those private capital investors who have a track record and also are able to explain to regulators and share their vision and share their longer term support for the financial services business, I think that can only really help to solidify that relationship between regulators and private capital owners.
So Ashley, you mentioned earlier that there are different investment strategies into the insurance space. What did you mean by that?
So to take an example, Blackstone, through their investments in Athora and Athene, will, through those vehicles, make acquisitions of insurance companies in the UK, Europe, Bermuda, other markets. And in doing so, they're building up effectively a premium pot or assets under management through that ownership structure. So their strategy is almost an AUM strategy. Whereas others are operating under a different strategy. So others looking for what we would describe as capital light businesses. So not insurers, not entities that hold capital, but those that take next to no, if any, underwriting risk in their models. So that will be acquisitions of insurance intermediaries, wealth managers, for example, and others with that regulatory capital light model.
Right. And private equity funds as well are diversifying the way they look at these assets. So, to take an example, you've got Inflection and their new insurance broker platform, where I think the play there is absolutely to acquire these insurance intermediaries and then build them up by doing a bolt-on strategies. Is that something you're seeing increasingly in the market as well?
Yes, absolutely. And I think we're seeing acquisition strategies really having consistency across the piece. So you're looking at perhaps building a broker platform acquisition model, or you're looking at making an acquisition of an insurance company and then an asset manager to support that, or a payment credit firm even who supports insurers. So you're really building potentially your own financial services ecosystem with complementary parts within your investment portfolio.
And that's not just in terms of expertise, but also in terms of operational efficiency. So tech and AI could be a good example of how, by building a platform, you're able to draw on those synergies and use that across the portfolio. So I think investment committees these days are also looking more and more at how AI can impact their investments, particularly in the private capital space. And there you're looking at not just the displacement risks of AI, but also the potential for it to drive further growth. Is that something that you're seeing?
Oh, absolutely. I think without question, it's within every IC deck that we see when we look at financial services businesses. How are they going to develop their own AI capabilities? How can they use it going forward? How is that going to drive value towards the next exit opportunity and whatever time horizon that might be?
Yeah, and it's not just with insurers and banks, but I think that's also the case with professional services, for example, which now falls within the financial services ecosystem as well.
For sure. And it's even relevant to us. And I think what that tells us is that we should expect really for 2026 and even into 2027 a really high volume of transactions between private capital and the financial services sector in UK and Europe. And I think, Min, hopefully you would agree with this, but that's going to be really quite diverse depending on the investment strategies that we've discussed in the different houses as they look at the opportunities across the sector.